The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the January 3rd, the fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Now, the easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I do want you to know that I'm absolutely grateful for your presence here. But even more important than that, and that's this. During this next 53 minutes, I'm here to serve you. So feel free to send me an email, send that off to Steve at TFNN.com. Inside that subject heading, please put radio show question. And of course, if you're inside the Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on fabulous and fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we're beginning our day with a sea of green out there. All the sectors inside the S&P 500 are firing to the upside. All the U.S. indices that we track, with the exception of the XAU, trading to the upside. Dow's up 198, S&P 42, 196 for the NASDAQ 100. Russell's up 22, 82 for trannies. Semi are up 86. NASDAQ Composite up 183. You've got gold that's off $9. Silver's up 39 cents. Light sweet crude is up 63 pennies. Natural gas is off 28 cents. 30-year Treasury is up 3 ticks at 113.27. And we're basically flat on the 10-year note at 108.25. Now, our leaders in the clubhouse to the upside, led by Mercado Libre, up 61 bucks, 3.5%. Monolithic Power Systems, $22, 3.5%. MicroStrategy, $18, nearly 6%. Powell Industries, $14, 6%. KLA Corp, 2% or $13 and change. Shakers to the downside, led by Kinsale Capital Group, down $22, about a 5% move. Adobe's off 13, 3% there. Dogness International's off about $13 or 27%. Carvana down 7, that's nearly 4% there. And Diego PLC is down about $5. That is a 3.5% move. Of course, there's movers and shakers. I would love to look at what you would love to look at. Let's begin our day. Take a look at that advanced decline oscillator for the New York Stock Exchange. It is now above zero. If it remains above zero today, closes back above zero on Monday, the rally is likely to continue. I would say not only do we get back to the highs out here from December, from right around Christmas Eve or what have you, that we take those highs out, probably generate an A to B equals CD pattern to the upside. But that's going to require some help from the Spot VIX Index. That Spot VIX Index, in order for that move to take place, we need to see that close below its 50-day exponential moving average. Right now, the 50 days at 1664. So watch that at day's end for a message for you. And price is printing out at 1706. There are new profiles that are attempting to form. Actually, I can show you those on the white background screen. I think for the ES and the NQ, they're pretty solid here. We won't know for sure until Sunday evening, but I'd say if there's with Stevie here at the end of the day, they'll form on Sunday evening. What I'm referring to is the ES and the NQ. If we take a look at their charts out here, as I had mentioned, sometimes my profile system generates two sets of profiles, one on the white background screen, one on the black background screen. You'll notice that I identified the support level on the black background screen because we were trading well below profile support on this white background screen, which is up at about 60, 76 or so. I hope I'm not confusing the heck out of you, but if I am, just stick around because I'll confuse you even more. But you can see that what price did yesterday was it held at 58.95 level. That was that black background profile support. Never got down to test out that swing point. I think it's from the 20th of December. Didn't get down to test that. We're still trading inside there. But right now, what the bulls have is a friend. And that friend is a group of support folks at 58.98. Now, what price is likely to do here, we'll have to take a look at the intraday chart, see if we see some signals out there. But price may go target that 59.91 level. That's the center of its profile. Again, kind of put this together with the spot VIX index, and that ought to assist you quite well. Above 59.91, there's oscillator and change line resistance. Now, that could be the top of the profile is up at 6107, but it's really going to be that green oscillator and change line that would release the message of the markets to you. We have been below that line ever since December the 6th out there. If we take a look at the NQ, also forming a new profile. It's kind of hard to see where the top of that profile is, but it's up at the 22,111 area. Both these profiles are ginormous. They're very large out there, so you want to keep your eye on it. Support here at 21,096. In the case of the NQ yesterday, it tested and rejected its swing point from December 20th out there. Was that on lighter volume? I don't know. I can't really pull that up on this screen here. But nonetheless, it was a test and rejection of that level out there. Now, you got that new profile, support at 21,096, the center at 21,547, and the top all the way up at the 22,111 area, with that oscillator and change line being also a key level resistance at 21,723. Now, in the case of the Dow still maintains its buy the D point pattern. You can see that little blue horizontal line out there. That is the low of the bar following bar number 9. That was December 18th low, and that number was 42,641. That's what's needed in order to negate that signal as it closed below that. So far, that is held. It does not have a new profile, but what should unfold is a rally up towards the 43,350 level. That is its oscillator and change line. If price does close, for example, today, and it can easily do that, excuse me, your price, I need a water, swig of water there. The price does close below that TD9 count bottom low. I think I gave that to you. But 42,641, that pattern would be negated out there. And it's possible. You know, what we're seeing here is overnight rallies. We're seeing international market, in essence, in the evening hour that's buying into the market out there. And then as the U.S. market comes to being, typically we see the sell-off here. So we got sellers in the U.S., we got buyers overseas out there. Maybe that pattern's going to stay the same. I would say that pattern decreases if the spot VIX were to close below and trade below that 50-day exponential moving average. Again, what I'd be paying attention to is that 1664 level out there. With regard to the we've had 4 consecutive days in the Dow to the downside, so that is certainly warranted of a 2-bar rally, at least to the upside out there. We had 5 days inside the NQ as well, 5 days inside the ES Mini out there. We know how that the tempo of the market, that's just kind of stretching things. In the case of Russell 2000, needs a bullish reversal candle to confirm a Rhodes momentum indicator bottom. So that's what's going on. We take a look at the daily time frame charts here for the equity futures. We've got about 30 seconds before that music comes on for a break. Let's go check in with the intraday charts out here for the ES Mini, see if we get those up on our screen. What we're looking for here real quickly is any kind of a topping signal. So when I take a look at the 5-hour time frame chart, I don't see any. Well, the topping signal is where a counter trend rally would end would be at 59.53. That's where we're trading right now. So if price is able to close above that, we're likely headed higher, 6,000. But that's where a counter trend rally should end. In the case of the 4-hour chart, it looks bullish out there. Should go target 59.95. We're bullish on the 120-minute chart. Resists also at 59.95. No topping signal on the 60-minute chart, nor on the 30. Maybe you've got one forming possibly on the 15-minute chart out there. So that's what's going on with the ES Mini. We come back to this break. We've just got a couple of requests. I would love many, many more out there. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the Opening Call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. Before we get to those requests out there, I've got the seasonal chart here for the Dow. This is just your plain old seasonal 128-year set of data chart out there. That red vertical line represents where we're at today. You can see that on average, the Dow typically rallies into the June 9th time frame. So basically about a week from yesterday, week from today, basically is where we should see that rally run into. If it follows this seasonal pattern out there. So we are in a favorable seasonal time period. Doesn't matter whether it's the Dow. The S&P 500 gets a little bit bumpy out here over its 97-year period of time. What I mean by that is you can see it typically forms a little bit of a top here January 6th, and then another one maybe the 11th, another one maybe around February. So it's a bit choppier with regard to the S&P 500. All right, so let's go get to those requests out there. First request coming in this morning was for SCO. I see that has changed, but as long as I've got that up on the screen, SCO is the short version, the 2 or 3x version of being short light sweet crude. Now, if you're going to trade that, what you want to do is you want to be aware of what's inside there. So, for example, right now the current contract is the February contract. That's the active contract. But when you take a look at SCO, and you can do this, it's easy to do. If you take a look at the holdings as of January 2nd, what you're really monitoring is the June 2025 contract, the March 2025 contract, and the December 2025 contract. This listener listened to the rewind of my shows after sending the email and had heard, because just as we said in today's move to the upside market update, was that light sweet crude had cleared profile resistance and was likely going to rally up towards the top of its weekly profile at 75.38. So in that instance, they switched over to the UCO. Well, here are the UCO holdings out there. It's different than SCO, so it's really important when you're trading any of these ETFs to go inside. And I'm not saying that this trader didn't do that, but I want to make sure that I'm sharing that message with everybody out there. I actually kind of fooled me. I didn't realize that the holdings for UCO would be different than SCO, but in fact they are. Now here in UCO, the only futures contract that it's holding is the June 2025 contract. Now, it's got these Bloomberg WTI crude oil balance swapped that make up the majority of the value of this ETF out there. So I got no idea how to track those exactly out there. But so you want to make sure that you're not just trading the futures contract, and you're certainly not trading the February futures contract. So what we've done out here is what I did out here. Let me just go to it now. Is I went ahead. The request came in so early enough this morning that it was easy just to go ahead and set this up. This is what you would need to do. Now, it's not going to be applicable necessarily to UCO. This is really applicable to SCO out here, which was just take a look at each of the daily contracts that were represented by that ETF, which again was June 2025. That suggests a further move higher, only in bar number 7 today. Same thing for March of 2025. Same thing for December of 2025 out there. And now here I can change this to UCO. Well, I can't really. That would be disingenuous. I'm not going to do that. Why am I not going to do it? Because we know that UCO only has the June contract in there. So let's do this here. Let me go over, and I'm going to close these charts, just free up some resources out there. But hopefully that helps somebody. If I just help one person today, well, that would be a beautiful thing. Now, my goal is to help more than just one person. But if I can help just one person, that's not too bad. We can do that, 52 weeks times 5 days, 260 days out there. That would be a beautiful thing. So let's continue to try to help this trader and get over and take a look at the intraday charts for the June contract. I hope that I put those up on my screen. We're going to be here a moment. It is. Well, I was looking at a different screen. Okay, perfectly. So we've got so what we have here, you can see on the daily time frame. I don't have the next level of resistance out here. I don't have the weekly chart anywhere. But this is likely headed into this swing point from back on October the 8th. Maybe it gets up to the top of that swing at 74.53. Let's go check those intraday charts out there, see if there's any kind of topping signals. I see nothing on a 5-hour time frame chart, nothing on a 4-hour time frame chart, nothing on the 2-hour time frame chart, nothing on the 60-minute time frame chart, a TD9 count top on the 30-minute chart that went ahead and completed as we came into the 11 o'clock hour. That says what you want to watch out here is the high of 71.66. If price is able to close above that high for this time frame, it would tell you about a strong upward momentum move, and that we would continue to move higher. However, on a 30-minute basis, what should unfold is price should pull back to test support, and support in this instance would be about 71.41. 71.40 is also a TD9 count breakout area, so old resistance can become new support as well. So everything looks hunky-dory, except you may have a little bit of a short-term time out there. So I hope that helped you out, both with regard to light sweet crude, trading an SCO, the short version of it, trading the UCO. Those two are different. They hold two completely different things out there, and you've got to understand those Bloomberg swaps if you're going to really manage UCO out there. So I hope that helps you out. Let's go to our next request out here, which was to take a look at NVIDIA. It's from Tom G, and Tom is long via the double. Well, that's not the right chart to go to. Let's go to this chart here. Let's see if we can pull up NVIDIA. Boom. Now, in NVIDIA's case, you really want to watch this today. One, it's traded above its TD9 count breakdown resistance level. That's at 141.82. It's traded above the swing point from December 24th. Now, obviously, light volume there, 105 million shares. Today, so far, you are up with 98 million shares. I'm going to go out on a limb here and say that NVIDIA has volume. I don't care how we square December 24th out there. You've got volume. What that says, Tom, is that this is setting up for an A to B equals CD pattern to the upside. If we give you the approximation for at least where the initial price target, and when I say initial price target, I'm talking about the 1-to-1 level out there. Remember, A to B equals CD patterns. They make 1-to-1 moves 60% of the time or so. The other 40% of the time, it's something different. In this case here, it will be something different. That retracement looks like it's less than a 0.6 retracement to me. You go measure that out there. That's what it looks like to Stevie visually, and that would say, yeah, more than a 1-to-1. Nonetheless, the 1-to-1 out here comes in at about the 149 level, at 148 and change out there, upper change, if you will. As price approaches that level, what you'd be looking for is a bearish reversal candle. You'd also like to see volume as it's moving into the swing point. Its all-time high swing point, I believe that is, from back on November 21st. And the volume there was 400 million shares. But again, you're doing one heck of a good job today. 100 million shares in 2 hours of trading out there. That gets us in a 300+ million share day for NVIDIA out there. If we're to close above, which it likely will do, but as long as it closes above 140.70 out there, if it did it with more than 400 million shares, that would almost guarantee, if there is such a thing in this business, that you'd get up to the top. But even closer to the side there, what we see today, taking out a B point on the daily basis with a swing point out there, looks hunky-dory. Now, at 146.46, you got a bit of a battle. That's coming from the weekly chart. That's its oscillator and change line. Right now, we are trading above the top of its TD9 count top, not its Rhodes momentum indicator top for the monthly time frame, but we are trading above profile. So NVIDIA looks muy bueno out there. This is going to be day number 2 to the upside out there. Last time that this moved higher, it was a 4-day move. Maybe get another 4-day move out there. So stay long that double out there, Tom G. Hope that helps you out and have a fabulous weekend. GTE wrote in, wanted to take a look at XPEV, wanted to do it in 2 different ways. And that's what we'll do when we come back to this break. Steve Rhodes with TFNN. We'll be right back.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
This portion of the Trader's Edge is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. So I've got the charts up on our screen here. This is a correlation chart. This was the request, and the request was this: how does the U.S. dollar index correlate to ticker symbol XPEV? I believe that is, I know it's a China company. I think it's in the electric vehicle business. Don't quote me on that. We're agnostic to it. We don't really care what it's doing. But with regard to, this is a 3-day correlation out there. And what this would tell us, GTE, is don't even think about trying to correlate the U.S. dollar index with XPEV, at least on a short-term time frame out there. So we've knocked that out of the park. In essence, there's no correlation there to follow. Let's go back. Actually, before I go back here, if you take a look at the, and I think you're long this, and I'm not saying don't be long this, but I just also wanted to share with you its seasonal pattern. Now, it's only 4 years worth of data. But that's the data that we have. And boy, this tells you about be prepared, be cautious to the upside out there, because this typically trades lower all the way into the March, really the May time frame out there before you see any kind of significant rally. At least that has been the pattern for the last, has it been 4 years, or are we in your number 4 right now? That didn't help me. Let me try this. 1, 2, 3, 4. No, it's already traded for 4 years out there. Well, some part of 4 years. No idea when it actually started trading. So that's the seasonal pattern out there. Now let's actually go take a look at the charts, see what kind of information it is providing to us. The charts are going to usurp, if you will, the seasonal pattern out there, but you always want to be aware of those undercurrents out there. And so we've been able to take care of that. Now, when we take a look at XPEV from a daily time frame, you've got a consolidation with inside its daily profile. You've got a Rhodes Momentum Indicator top, and you got an island top candle formation out there. That's the most bearish topping pattern that you can get. Right now, though, support 1145, resist up at the 1231 level. In the case of the weekly chart, you are above resistance of its profile at 978, but you're below its momentum of its oscillator and change line at 1211. Says it could trade lower. That says keep your eye on the daily time frame. Monthly chart out here looks pretty good, and that price has been able to close above for 2 consecutive months at the top of that profile. But that's being tested already this month again, and that key level of what should be support is 1143. So you got 1143 on the monthly, you got 1145 on the daily. I would say that if you close below the swing point from November 26, that has volume of 6.2 million shares. That low is 1123. If you do that with more than 6.2 million shares, you're going to get an A to B equals CD pattern to the downside. Its price projection-ish area, because I haven't measured that out, would be around the 862 level. So be careful with regard to XPV. You know what its seasonal patterns are like. The U.S. dollar index is nothing to correlate to it, at least not as I saw it. We took a look at the 3-day averages out there. So GTE, hope that helps you out. As always, thanks for your request. Next request coming in from SatP. We'd like to take a look at ticker symbol MDB out here, MDB. We take a look at MDB, and you were looking for an entry point. So, unfortunately, the TD9 count bottom pattern that formed out here on December 20th and completed the next trading session on the 23rd was negated. So, and I don't see an A to B equals CD pattern to the downside. I see a new profile that is formed out here. I'd like to test this or look at this on my other system as well. So if you give me a moment, I'm going to get over there, take a look at MDB, make sure I've got a same profile level, and we do. So it's a new profile that formed today. And your resistance level, which is basically where we're trading, or we traded to today, I should say, the resistance level or the high of that profile is 246.65. And the bottom, which is kind of a bullish structure profile, if you will, is between 238.99 and 240.90 out there. You're looking for an entry point. You just got a new profile, and look at that red oscillator and change line, or the oscillator and change line itself out there. We've been below that on a daily basis. It was not an island top out there. It looked like an island top. It smelled like an island top. Oh, that was on XPEV. That was an island top. We don't have that on MDB. So here, at least if you were to close above that red oscillator and change line. So that's going to be, we're going to use the top of the profile for that as well, 246.65. Then you could have a profile change in trend that could take you into that trade, but I don't have a bottom pattern other than that bottom of the profile between 238 and 241. Sometimes that can be a bottom. But the weekly chart says bottom what? We're trading inside a swing point from the trading session of, really the swing low though. No, it was this. The trading session of August the 9th, that's 2024. Volume there, 6 million shares. We came into it last week. We closed inside it last week with 8 million shares. If this continues to close below the support or the top of that candle, Top of that candle, 239.65. We're just above it right now. But if we close back below that, 239.65, it increases the odds of move back to test that swing low. And finally, on a monthly time frame, SAT, I don't have any kind of a bottom signal here. We are trading below the bottom of its profile. The bottom of that profile is 242.43 out there. So those are the numbers to watch. I'm just not getting the warm and fuzzies with regard to MDB. Maybe we'll get more warm, fuzzy feeling from Upstart, UPST, which is what SAP is also looking at for an entry price. And here you've got now, I don't know if that's a good enough retracement for an A to B equals CD pattern to the downside. I don't think so. But right now you're trading below all kinds of support. Support being the profile, which is well above price. It's oscillator and change line out there. So likely to head for lower price. I won't make the comment that price is going to move to 37.97. That's its breakout level. But let's look at the weekly time frame chart. Weekly time frame chart has a Rhodes momentum indicator top. That formed 2 weeks ago. We're trading below last week's low. That's going to be the third week to the downside. So you could get some type of rally. Maybe a 1 week, maybe a 2 week rally. You could get that. But because we're trading below all this, boy, 44.66, 39.56, and 37.41 sure look like a possibility out there. The monthly chart is saying, Stevie, wake the heck up out there. Why is that? Because it is in bullish mode out there. Well, what that means, it's really waiting on the daily and the weekly in order to form some type of bottom pattern out there. So SAT-P, I would continue to look for it. It's not today. I'm not sure where it is just yet, but today's bar number 5, so maybe we come back to that a week from today, maybe Wednesday, Thursday, Friday, sometime of next week. So wasn't able to give you entry prices really for either of those two instruments. Sometimes that's just simply the way the cookie crumbles. And that was Stevie's cookie. Let's go take a look at Palantir out here. This is for ELO inside the Tiger's Den. PLTR is the ticker symbol. We take a look at Palantir. What do we know? On a daily basis, you're trading above the top of its profile, so that's bullish, but you are trading below its oscillator and change line. It's not bearish. It just tells us it has lost its momentum. Its price target to the upside right now would be that oscillator and change line, currently printed about 81.60 and 81.60-ish, but it's 81 and change out there. So the daily chart negated a Rhodes momentum indicator top, so looks pretty good. It is the weekly chart that is that little booger. That booger's got a TD9 count top that says you need to close above 80.91. 80.91 is the top of its profile. It's also the high from the week of December 13th. So you've got a top, but basically price is pulled back, in essence, to test support. And that was that green oscillator and change line at 71.82. We didn't get down there. We got down to 72.42. But that test of support may have unfolded. So you're kind of in a neutral position on the weekly. Monthly is all out bullish. Steve Rhodes with TFNN. We'll be right back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in a fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. I'm just waiting for those Palantir charts just to come back up on my screen. So to summarize Palantir, it's bullish on the daily. Going to go target the 81.59 level. That's its daily oscillator and change line. It is neutral on the weekly time frame chart. You need to close above 80.91 in order for that to get into the bullish mode. That would join the monthly chart that is in bullish mode out there. So expect a rally up towards that. Its all-time high, up towards 81.58. If you can clear above that, you get to the all-time high. And if you close above 80.91, you're off to the race to the upside. So hope that helps you out, ELO. As always, thanks so much for your request. Ron wants to take a look at natural gas. Ron's question is now the time to be shorting natural gas out there? So let's take a look at the natural gas contract out there, and I'd have to say no. Prices pulled back. So we were above. This was a bearish structured daily profile, at least on my white background screen. So let's go ahead and open those up here, Ron. This would be my reason why I say no. Is that price had closed above. When I say a bear structured profile, folks, what I mean is the bottom of the profile is exclusively where buyers hang out. The top of the profile is exclusively where sellers hang out. The center line is where both buyers and sellers believe there's fair value with inside that range, the range being the top and bottom of the profile. So we call that a 50-50. If that line is closer in proximity to the top than the bottom, then it is a bearish structured profile because we have more sellers in that range. What is that range? 335 to 354. Now, that was not that. So I just want to make sure I covered that with each of you. When price trades above the top of bear structure profile for 2 consecutive closes, that tells us about a breakout message. Doesn't mean retracements can't happen. As we can see, retracements can happen. And in fact, in the case of natural gas, it confirmed a sell the D point top on the trading day of December 31st when it created that bear sash candle out there. That said, we should pull back to test support. The first level of support was $3.54. Obviously, we tested and rejected that yesterday, and today we have sliced right through that. But if this is only a counter trend move to the downside, where price would find support is at it could be at that 354 level, but the Custard's last stand, and who doesn't love custard out there? It would be at $3.35 out there. So it would be tough for me to tell you to short natural gas when prices pulled back to a level where a counter trend rally would end. Now, if the counter trend line is going to end there, we ought to see bottoming signals on some of these intraday charts out here. So as we start with the 5-hour chart, don't see it. Got an A to B equals CD pattern to the downside. It could be moving all the way back to its breakout level at 309. If I look at the 240-minute chart, don't see it. Sounds like George Bush, doesn't it? George Bush Sr. out there, $3.09. And if we take a look at the 120-minute chart, you could be at a potential bottom. The question is, can price hold $3.39? We're trading just a couple pennies below that right now. That is its breakout level for the 2-hour time frame. This bar here, Stevie's bar, one that's serving sake, of course, is going to close here at, 12 noon. So it closed in just 15 minutes below 339, which suggests lower price. The 60-minute chart negated a TD9 count bottom pattern. No bottom pattern on the 30. It's the 15-minute chart that would have to be the savior, as well as the 10-minute. 10 minutes got a TD9 count bottom with price consolidating with inside his profile. Rhodes momentum indicator bottom, price traded with inside his profile. So your support out here is between 334 to 335. And resistance up at $3.41 or 42 cents out there. But do you go short? Even though the counter trend move says the intraday chart say we should head lower out there, that's your call, not Stevie's call out there. But I've provided you with what I can. So I do hope that helps you out, Ron. And as always, we'll take a look at natural gas futures, see what they're telling us next week as well. So as always, thanks so much for your request. Dude inside the Tiger's Den wanted to take a look at ticker symbol GDWN. Well, that's not where it is out here. Let's see if we can find GDWN. There we go. GDYN. Was it WN or YN? What did I put in YN? Where's the question? GDYN. Okay, we got the correct symbol. So what do we know about this for its daily time frame? Well, the first thing we know is that it formed a Rhodes momentum indicator top when it gapped up and created that shooting star candle on December 27th. But because it was a gap up, it's kind of questionable. Was that a bearish shooting star candle if we really fill in the blank out there? And the answer is no, it wouldn't be. But right now, we're going to go with that as a top. Price is trading with inside its profile, and it's testing support, dude. And support, as you can see, is that green oscillator and change line. Let me just open up the chart, so we're just looking only at the daily time frame chart. Now, if price were to close below this green oscillator and change line, we're trading basically right at it today. We're at 22.04, and that's at 21.99. If you close below 21.99, well, shoot, there's support at 21.61 out there. But if you close below that green oscillator and change line, tells you've lost momentum. What Stevie would say is the number I think that's most important to you would be 21.61. If we close below that, we likely head back to its breakout level, and that would be at 19.40. This is going to be a 4-day move to the downside. However, this moved 5 days to the downside back on November the 18th out there. So maybe you got another day to the downside out there. You are testing support. That's that green oscillator and change line. So Stevie will say that the daily time frame, even though it's got a top per se, is neutral at the moment. The weekly time frame chart looks all out bullish. It negated a TD9 count top a couple of weeks ago. I don't see any kind of topping signal. It says wave number 7 could be out there. Let Stevie take a look at this chart by opening it up. Let me see where that began. And now, Stevie's questioned that wave number 7 count out there. But nonetheless, the weekly chart here looks bullish. It's above all profile resistance. What you love about last month, the month of December, was it took out that TD9 count breakdown resistance at 2012 and made it all the way back there after forming that TD9 count bottom in May of 2023 out there. So the monthly chart is bullish. The daily chart is neutral. The weekly chart is bullish as well. So hope that helped you out, dude, with regard to GDYN. Perfect. We've got time out there. AQST, if we've got time. We've got the time. AQST out there. So let's take a look at that. How about that Georgia-Notre Dame game out there? Notre Dame looking mighty strong. How about the teams that still remain out there? This is going to be a good playoff. I think there's probably like 10 more games left, but at least the primary 4 that are out there. That's going to be some good. That's going to be a good games. Looking forward to it. AQST, get to it, Stevie. AQST's got a Rhodes momentum indicator bottom. Price was below the bottom of that bullish structured profile for more than 2 consecutive sessions out there. Right now, this is where the counter trend rally would come to an end at about 372. If price can close over 372, you move up to 403. No bottom pattern on the weekly time frame. You do have bar. I take that back. You've got bar number 8. That's going to go ahead and confirm today. In order for a TD9 count to confirm next week, Dan, you've got to get a close below the close of bar number 5. That's at 361 out there. So there certainly wouldn't be much of a rally. We're below profile support. But this could form a TD9 count bottom. But it's got to close next Friday below the number that I just gave to you. I think it was 341 out there. And the monthly time frame chart, I just see a consolidation with inside its profile. Bullish structured profile, 260, 331, it looks like, is your buy zone. 544 is resistance out there. You had another request, which was to take a look at INMB. So let's get that up on our screen out here. And we're only in the last segment, so I'll probably be able to get to Amazon, Mr. Bill. Did I see Amazon pop up a while ago? Didn't, but we'll go take a look at that. And we'll try to get to the intraday chart. So we take a look at the INMB. It's rallied right up into the resistance of its TD9 count breakdown level. That's a nice move. $5.27. You also have profile resistance at $5.31 out there. So you're up against some significant resistance out here. The daily looks good. Well, the daily, 535 is where a counter trend move would come to an end. And you're going to get a TD9. You may get it. We'll be right back. Steve Rhodes with TFNN.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Welcome back, folks. We're looking at INMB out here. This is for Dan inside the Tiger's Den, I believe. And so I want to look at the weekly chart. So the weekly chart has two different A to B equals CD patterns to the downside. I'm showing you the C to D leg for both of those patterns out there. That first pattern that started from the high back here on February 16th, obviously, that was an extension maybe as a 1 to almost a 1 to 1.6 rate or 1 to 1.2. But last week you did get a bullish engulfing candle. So you do have a bottoming pattern there. If price closes below that low, negates that signal, you likely head back towards the 225-ish area. So on a weekly basis, you're up towards that counter trend level. You're up at resistance on that daily time frame. And the monthly, next month, in order to form, and I'd love to see this here, in order to form a TD9 count bottom pattern, you would need a close below 539 next at the end of January out there. So that's what I've got there. Hope that helps you out. Let's take a look at FXI. For GTE and FXI here, all I've got for FXI is this trading with inside its daily profile. So your support level out here, you pull this back just a tad, you've got support. It's even hard for Stevie to see. 30.05 is support, 30.59 is resistance, 30.46 is your daily center of that profile. On a weekly time frame, price is testing support. That's the bottom of its profile, and that's at the level of 30.17. If you close below 30.17 for 2 consecutive weeks, you're headed lower. You just have a consolidation for FXI with inside its profile as well. Lastly, with just a few seconds to go here, let me see if I do have the ES Mini up. I hope that I did do that. No, I've got the N. I've got natural gas. Okay, let's see if I can get this to populate here before we go off the air. We'll try to run this down towards the very last portion of the break, see if we can get this out there. But folks, have a fabulous weekend for sure. We're going to wait to see if we get the ES Mini up here, but we are nearing that point in time. Just want to see if we've got any kind of intraday topping signals for folks that are out there. And but I'm not having the luck. I'm not having that breakthrough, even though I've oh well. Sorry, folks. Hey, look, have a fabulous weekend. I'll look forward to seeing you on Marvelous Monday. Thanks for all your help today and all this week. Take care and be safe out there.